Hello everybody, it's Wemer Ferreira from 1nvest, and today we're going to talk inflation and how to protect your portfolio against rising or high inflation. If we look around the globe, central banks have been hiking rates over the last 12 months. If we look at the Fed alone, they've hiked 75 basis points in the last 3 meetings, and in South Africa we follow suit, so higher interest rates. And the whole reason why they're doing it is to try and curb inflation. They're trying to bring down inflation to a more acceptable level. So how, as a South African investor, do you protect yourself against high inflation? The only real listed option in South Africa would be inflation-linked bonds. But let's look at inflation-linked bonds. Nominal bonds are where the coupon is fixed to maturity, whereas inflation-linked bonds, the coupon is not fixed. The coupon is indexed against inflation, which means as inflation rises, your coupon or your interest rate would rise, which means if you hold the bond to maturity, you guarantee to outperform inflation. So how do South African investors get access to inflation-linked bonds? The best way would be through an inflation-linked bond fund. At 1nvest, we've got the 1nvest Inflation-Linked Bond Index Tracking Fund. And if we look at that fund's performance over the last while, on a 2-year basis, the fund is the third best performing fund in its CISA category out of 37 funds. And over a 1-year period, it is the best performing fund out of 43 funds. So at 1nvest, we believe in a balanced approach. We believe that positioning your portfolio for market conditions in order to achieve your outcome is necessary. And we think inflation-linked bond index tracking funds is a great way to help you achieve your goal. Thank you very much for listening, and we'll chat again next month.